Hello everyone. We are continuing with our topic interest on capital. First, we should understand the concept of P&L appropriation account. This account is nominal in nature. That means debit side we will have all expenses and losses, and credit side we will have all income and gain. But this account is prepared after P&L account. So you can say this account is an extension of P&L account. P&L appropriation account is an extension of P&L account. So the profit which is revealed by the P&L account will be transferred to P&L appropriation account. So on the credit side, we will write by P&L account. We can understand the journal entries also. If here we have by P&L account, so your first journal entry will be P&L account debit to P&L appropriation account. By means it's debited and the name of account is credited. So first entry P&L account debit to P&L appropriation account. Then we can charge interest on drawing from the partners. So that is the income for firm's point of view. So on credit side, we will write by interest on drawing. Then we will charge the interest on drawing from partners like from A, from B, from C, and the total will be considered in the outer column. So your journal entry will be interest on drawings account debit to P&L appropriation account. So credit side we have considered income. Then debit side we will consider expenses. But remember, all these transactions should be related to partners only. The transactions which are part of appropriation. Please remember, in P&L appropriation account, the transactions should be which are part of appropriation. So debit side, those expenses which are related to partners. So we can provide salary to a partner, which is the expenses for firm's point of view. So on debit side, we will write to partner salary account. And suppose we are giving salary to B only. So we will write B's capital account and then amount will be written here. So the journal entry will be P&L appropriation account debit to partner's salary account. If we are providing interest on capital to partner, then your entry will be P&L appropriation account debit to interest on capital. Then one by one we will write all the partners' name. A is capital, B is capital, C is capital and their values. Then if we provide commission to a partner, we will write to partners commission account and the name of partner with amount. So your journal entry will be P&L appropriation account debit to partners commission account. Then last, the balancing figure. The balancing figure of P&L appropriation account is your final profit or loss given to the partners. So if credit side is higher, we will provide profit to the partners. So your last entry will be P&L appropriation account debit to partners capital account. Now you can write P&L appropriation account debit to A's capital account, to B's capital account, to C's capital account. This is for the final distribution of profit. Again I repeat, this P&L appropriation account is nominal in nature. This is an extension of P&L account. After getting profit from P&L, that profit will be transferred to P&L appropriation account. So this will come on the credit side of P&L appropriation account by P&L. Then credit side we have an income, only one income is there which we can get from the partners, that is interest on drawing. Then debit side, the expenses which are to be paid to the partners. So we can provide salary to a partner, we can provide interest on capital to partner, we can provide commission to partner, and final profit or loss will be given to the partners. Consider the question number 35-1, page number 2.122 of D.K. Goel book. In this question, there are two partners X and Y, and the profit is given 9,000 rupees. So in P&L appropriation account, we will write first of all by P&L. Profit for the year, that is rupees 9,000. Then after, in the question it is mentioned that there is no agreement among the partners, or interest on capital is not specified in the partnership deed. So we cannot provide any interest on capital to the partners. So this 9,000 rupees will be distributed among the partners X and Y in their profit sharing ratio. So we will transfer this profit to their capital account. So we will write two partners capital account. X will get 6,000, Y will get 3,000, because the profit sharing ratio among the partners is given 2:1. It is specified in the question, the PSR among the partners, profit sharing ratio among the partner is 2:1. So the profit 9,000 we have transferred to the partner's capital account in the ratio of 2:1. In the second part, this time there is a loss. And as we know, if we have a loss in the firm, and if interest on capital is specified in the partnership deed, then also we do not provide any interest to the partners. So this loss will be distributed among the partners in their profit sharing ratio. So we will write credit side, because now we are providing loss. So we will write on the credit side by partners capital account. X and Y ratio 2:1. So X will bear a loss of 4,000 rupees. Y will bear a loss of 2,000 rupees. In this case, we have not provided any interest on capital, because by default interest on capital is a part of appropriation, and in case of appropriation, if loss is there, then no interest on capital will be provided to the partners. In the third case, this time the profit is given 9,000 rupees, and the partners are entitled to get interest on capital 6% per annum. So X was having a capital of 50,000. So 6% of 50,000 is 3,000. So we are providing interest on capital. So we will write on the debit side interest on capital. X will get 3,000. Y will get interest 6% on 30,000. So 6% of 30,000 is 1,800. So total they are getting 4,800 rupees interest. Out of 9,000 rupees profit, 4,800 has been given as interest on capital. Now remaining amount, balancing figure, we have 4,200. This 4,200 will divide among the partners in their profit sharing ratio, which is 2:1. So we'll write two partners capital account. X will get 2,800 rupees share in profit. Y will get 1,400 rupees share in profit in the ratio of 2:1. In the same question, fourth part, this is very important one. In this case, the profit was given only 3,000, and the condition is same. Partners will get 6% interest on capital. So as we discussed in previous case, if we provide interest on capital to X, he will get 3,000 rupees and Y will get 1,800 rupees. So as you can see, X is to get interest on capital 3,000, Y will get interest on capital 1,800. So total burden on the firm is of 4,800, but the available profit is only of 3,000. Available profit is only of 3,000. So it's a case of insufficient profits. So now we cannot provide full interest on capital. So what we will do, this profit of rupees 3000 will be divided in their capital ratio. So X capital is 50,000, Y capital is 30,000. So the capital ratio is 5:3. So these partners will get 5 by 8 of 3000. This profit will be divided in the ratio of 5:3. But we are not providing profit. We are providing interest on capital. So as you can see, 3000 is divided in the ratio of 5:3. 3000 into 5 by 8. So X will get 1875 rupees as interest on capital instead of 3000. And Y will get interest on capital 1125 rupees instead of 1800. In the next part, this time the profit is given in the question rupees 3000. But in this question, interest on capital is specified 6%. But it is clearly mentioned this interest is to be given to the partners even if firm involve the loss. So if there is a loss, then also we need to provide full interest on capital. So first we are providing interest on capital. This time it is a charge. So we need to provide full interest. X will get 3000 rupees interest. It is 6% of 50,000. Y will get 1800 rupees interest. 6% of 30,000. Total amount 4800. So out of 3000, 4800 cannot be provided, but we can incur the loss. So we need to provide 4800 rupees as interest on capital. So 3000 is available profit. So we have a loss of 1800. So this 1800 loss will be distributed among the partners in their profit sharing ratio, which is 2:1. So X will bear a loss of 1200 rupees. Y will bear a loss of 600 rupees. Why we provided full interest on capital in this case? Because it was specified in the question that interest on capital is to be treated as a charge. So your language can be even if firm involve the loss, then also we need to provide interest on capital. That means they have specified interest on capital as a charge. Now we will discuss the difference between drawings and reduction in capital. As you can see that one partner has introduced 1 lakh rupees, 1 lakh rupees, 1 lakh rupees, 1 lakh rupees. Total 4 lakh rupees he has introduced in his business as a capital. So total 4 lakh rupees is the capital amount. Then he has got 20,000 rupees as share in profit. Then 30,000 he has got as a salary from the firm. Then 10,000 he has received as a commission. So red portion is the other benefit which he is getting from the firm, and yellow part is showing his contribution in the firm. Now suppose out of this yellow part, if he withdrew 1 lakh rupees, so now how much amount is left? That is 3 lakh. So if we reduce something from this yellow part, from his permanent capital, that is known as reduction in capital, or you can say drawings against capital. But if we withdraw something from this red portion, from the red part, if we withdraw suppose 10,000 rupees from this red part, then it is called drawings. Then it is called drawings or drawings against profit. One other same thing. If we withdraw something from this yellow portion, it is drawings against capital, or you can say reduction in capital. If we withdraw anything from this red portion, then it is called drawings or drawings against profit. What is the use of this difference? Because drawings against capital is considered for the calculation of interest on capital, and the drawings against profit or the drawing is considered for the calculation of interest on drawings.